Well, on the customer business side, we are satisfied. If you look on the numbers, net commission income is 7% up year on year, so that's a good result. More importantly, NII, we said last quarter we want to stabilize NII on the level which we have seen in the first quarter, and we managed to do so. And we kept our guidance for the revenues for the complete year by saying that they will be slightly above last year. So that's very good. Also, with respect to the cost targets, we set a cost target of 6.5. We are absolutely in plan with that, except for the already mentioned write-off, which we had to do for the outsourcing project stop. And the LLPs came in very low. 87 million is nearly nothing, to say it like that. And in total, we now have seen LLPs for the first half of the year of 235, which is also very low and one of the lowest results since the start of the pandemic. And it gives us a lot of buffer to our guidance of less than 1 billion for the full year. Specifically, if you take into account that we kept our top level adjustment of 495 million untouched as a buffer. And most importantly, capital ratio has been very strong, 13.4%. That is a stable number year on year. And you have to keep in mind that we now booked nearly 2 billion of our restructuring costs for our transformation program. So we are nearly through the booking of the restructuring costs, but we kept the capital ratio stable, which I think is an important step.
Annette has just joined us for the interview. So Annette, let me hand it over to you.
Well, thanks, Jeff. I was just missing the line for the operating profit or operating result outlook that this is going to be positive also in 2021. You had it in your outlook section for the results of the first quarter. So is that still something you are targeting, or should we be braced for like an operating loss for the full year?
No, absolutely. I mean, we are targeting definitely an operating profit. I think the whole question is what happens with the net income. That is tougher to predict. I mean, we have now booked nearly 1 billion restructuring costs for this year. We have some tax results, etc. But you can be ensured that we will see an operating profit. Net income is tougher to predict.
Let's talk a bit about the ECB and what it means for your business. I've seen that you actually benefited from the TLTRO program by 42 million euro in the last quarter. Are you expecting to also benefit from the extraordinary measures in the second half of this year? And what does it mean that the interest rate hike, a potential one, is further pushed into the future now?
Well, on the TLTRO program, yes. I mean, we have now booked the remaining of the first program, to say it like that. We also participate in the second one. We are also optimistic that we get the revenues or the additional revenues out of the second program. You will see then the first half in the fourth quarter, something around 95 million euros, hopefully. And on the interest rate policy, to be very honest, we have been very cautious also in our strategy 2024, because we didn't assume any recovery of the interest rate level until 2024 in our plans, which we have announced in February during the Capital Markets Day. So any positive change would be anyhow only an upside for us. And